Hey traders, hope you're doing well. Welcome to another Monday market breakdown. I had a good look at these charts this morning, and what I'm seeing is no scenario where we can really get long with any real conviction. I'm going to run through these charts again just to show you what I'm looking at. I'm trying to go with a bullish stance just to counter my current bearish outlook that I have to see where I'm wrong. And I'm still struggling to find a scenario where I am wrong. So kind of zoomed out a little bit to see these bigger structures, the more reliable, higher time frame structures, to see exactly where we're lying and why I still have this bearish outlook. So if we go to, let's go to the E-minis, the S&P, and you can see how far we've come without a really decent pullback in the S&P minis. It's really challenging to look for a scenario where you can see that there is still a long way up to go from here. I know the market is saying that there's a lot of talk about a melt up, how we could just start to get running. And it is obviously a possibility, but structure-wise, where we're sitting is a long way up. So the most basic structure we have on the lowest or on the higher time frame at the moment is this little weekly structure where we have a little ABCDE expanding triangle. We have this impulse before, and when we push into the structure, you can see how we're very close to that 1.618, that 4,000 level that I was always keen on for a turnaround. When we go a little bit more zoomed in, the better, the most reliable structure we have is this little impulse here and this corrective structure here. No matter how we look at it, this is your impulse, and at the very least, this is your corrective structure. And we're sitting very close to the 0.618. So as you can see, there's still a little bit of room to run on the lower time frames, but we're sitting right near the borders of that extended higher time frame structure. So it makes it really, really challenging to get long with any conviction. So trading this, I think the only really good way of trading this is to just buy call options with fairly low risk and just to see if those are going to run. I don't think we can really get settled into some really deep, long positions and have conviction that they're going to run in our favor. So it's really, really risky trading at the moment, given where the market's sitting. Same with triple Q, with the NASDAQ. If we zoom out, you can see on the monthlies just how far we've come since a decent corrective structure. Weekly wise, again, probably the best we have. And even when you look at it, look at the size of the correction we have in comparison to the previous impulse, and you can see how small it is. And when we go in from the previous little MACD, so I'm looking at these MACD crossovers here and the push up, we're already beyond the extended, following a really small corrective structure. Even if we extend to, let's say, this being an expanding triangle structure, then we can see that being a full correction. And even then, we're still sitting at this extended level, way beyond the extended level. So really, really risky levels to be getting long with any conviction. Going into the daily structures, the best we have is this big impulse, this tiny little ABCDE triangle, which has no place to be the central corrective structure of this big structure. So I don't really know where we can look for a structure on these lower time frames, just seeing how this market is melting up, unless we have to look at this as a corrective structure, which at some point needs to have a decent pullback, which is in the lines of 14% pullback. So yeah, triple Q, really challenging to find any conviction, any structure that really makes sense. It just shows you how much this market has moved, when this is this tiny little crossover on the daily is the best we have in terms of a correction in a market that's moved 106% since the March lows. Dow Jones, there's a little bit more of a structure in it, where we actually have a nice impulse. We have a decent little running flat, even though the crossovers are really small on the daily, and we are sitting close to the 0.618. So the Dow Jones, which is known as the smart money, has a little bit of conviction in terms of the lower time frames. But if we had to zoom into or zoom out to the higher time frames, you can see how far we were extended. We're well beyond the 1-to-1, approaching the 0.61 or the 1.618 extended region. So maybe the Dow Jones has a little bit of conviction for room to run, but even then we're sitting in that the overheated area of that market. And then the Russell, which you may have seen, is also just in crazy town at the moment. We've got pretty good structure to work off here. Nice little impulse off the lows, nice little running flat / running triangle. And again, we are beyond the 1-to-1, approaching the extended target on the lower time frames. Higher time frames, really challenging to find a structure, but the best we have, I think, is this impulse and this really convoluted expanding flat, which again, sitting right towards that extended level. So again, just showing you how extended we are on a lot of these charts. If we go to Facebook, again, really challenging. If we take away the drawings, you can see how on the weekly, the only real correction we have is this little one here. So if we look at it and how small this correction is in relation to what could be conceived as or perceived as the preceding impulse, it's way too small for us to consider all of this a corrective structure. It's not even close to the 0.618. So we'll have to really find an impulse preceding it, which at the moment is only this tiny little crossover here, which means what we have is that as our impulse. So in terms of length, we could look at this little contracting flat as a potential, but even then, if that is the case, we're sitting right at that extended level. So that really doesn't work for me either. Zooming into the lower time frames, all we really have is this big impulse up, and we have this fairly decent long drawn out correction. So if we are looking for longs, we're approaching that point where we could maybe find a long trade in Facebook, which could give us quite a nice little upside. So this is one of the charts that actually working towards that melt-up scenario, which might get us going from around about this 250 region up to this 435 region. So nice 65% melt-up. So that makes sense on Facebook, just on the lowest perceivable structure that we have. But when we zoom out, it doesn't really make sense within the lower structures unless we're still looking at this as a contracting flat, which is a possibility. I'm more inclined to think we are sitting at the highs of a structure and we still have a little bit of downside to come. But what my opinion is doesn't actually matter. We need to look at both scenarios, see which ones are going to work for us. And we're basically just trading. We can trade both in almost a straddle stance where we get short anything below 240 and we get long anything above 302. And we just let that ride. It doesn't matter what your outlook is. The structure says we're either going up in a big way or we're going down in a big way, and we can trade it in both those fashions. Apple, it's a bit less clear. I still think we need a pullback. In terms of structure, we can look at this as a big impulse, which maybe sets us up for a short and then a long following that. So maybe we get a dip down before we get that melt up structure. So we can look for this to pull down towards this $100 region and then give us a nice long from there up to 193. That's another big melt up scenario, but it's going to give us a pretty deep pullback first before we get that. So I don't see how this structure is going to play out as anything else. Maybe a running triangle, but even then it doesn't really work because you have to look at this as an A, B, C. Your D wave is really long in comparison to all the other waves. And that's your E wave. It doesn't really work for me as in a running triangle. So I still don't see a scenario where we can get this deeper pullback before seeing a melt up. And again, I'm more inclined to think this is going to be more of an expanding triangle or expanding flat rather than just a standard running flat if we start to see a sell-off in the market. Amazon, it's another one. We zoom all the way out and just remove any drawings. You can see how extended we are. Best we have is this impulse up, A, B, C, D, E, running triangle, and we just beyond anything that resembles a monthly corrective structure. The weeklies, the smallest crossover we have is down here, meaning all of this is an impulse, which means all of this is still corrective in my view, and we still have quite a long way to go in terms of that being a correction. As you can see, we just crossed the 0.618 if all of this is going to end up being a type of a running flat for further upside to come. So this is another scenario that's pointing towards initially a deeper pullback and then that extended melt up that the market seems to be talking about. Don't really see any other scenario. I mean, we can look at this as a kind of contracting flat. And if that is the case, all we really have is this as an impulse. That's the correction that's long enough to be the impulse, which means, again, we're sitting right at the top of the structure, right at those extended levels. So there's no real conviction to look for any really big longs. Again, the only long that we could be looking for is if we look at all of this as a big impulse in isolation, which means we have to ignore everything that's happened before. And we may be approaching the end of this correction now. We're sitting close to the 1-to-1. So in terms of the correction itself, the structure, we have an impulse up, we have a move down, choppy move up, move down. I think we still need another leg up and then another leg down before we can look for a long. I'm more inclined to think this is the start of the move perhaps, and we have an ABC corrective structure right at the beginning of a bigger move to the downside. But again, either way, we can let this play out just a little bit longer, maybe even look at it as a kind of convoluted triangle, and then just trade it as a straddle. Good upside on either side, or good upside to the upside, good downside to the downside. But again, how do we get along with any conviction given the broader spectrum? Microsoft is another one. Would have to look at the higher time frame as that being your previous impulse, which means we are still in correction, which means we still need the big move to the downside to come. And even if we look at this as a kind of zigzag, you can see how we're sitting right at the top of that structure. In terms of length of correction, we're approaching that region where we could start to see the pullback, and then all of this start to look like an ABC correction. Lower time frame, there's potentially good conviction for upside here on the lower time frames because we have this big impulse up. Length of correction, not great. So can't really have conviction that this is your big impulse, but we have seen something along these lines before. So if you get a 0.618 correction, you might get a 0.618 impulse to the upside. So you could look to max out at 271. So you're going for a little bit of decent upside, but not much. You've got 12% upside to come, but you're going against the trend. You're seeing quite a bit of MACD divergence on the daily, and we still believe we have a deeper pullback to come. So again, it's a risky long. There's no real conviction for a long-term long that really makes sense. Netflix is another one. Lower time frame, the structure is decent. You have an impulse, A, B, C, D, E. The length of the correction, it works, but it's really short to what we would prefer to see for any conviction for upside. We just made 1-to-1. And usually we want to make kind of 1.6 before we get a decent conviction for upside. And then if we look at the structure itself, we still have some decent upside to come, kind of 639 to 750 upside, which means maybe we get some good trade to the upside. I'd be surprised to go to full target on this. So I'm more inclined to think the 0.618 would be the full target. Zoomed out. Monthly, you can see how far we've come before in decent structure. Zoom down to the weeklies. all we really have is this big impulse and a triangle that is really small. It's really short in comparison to the upside. So we can't even really look at that as a complete structure. But even if we do look at it as a complete structure, we are sitting again really in that maximum region, or that upper echelons of the structure. So it's really dangerous trading at the moment, trying to be long with any conviction. So like I said, it feels like the most prudent thing to do is just to look for some decent looking call options that you can hold on to in case we get the melt up, but you don't get punished too badly if we start to see that big sell-off really start to take hold. Google's another one. There's no real conviction for structure on the lower time frame. I can't find anything. Maybe we're looking at this as an expanding flat and we have our look that's long, but even then, that would be your previous impulse, which makes this correction too short. And when you even look at that as your correction, we're sitting well beyond the extended region even. If we go back to looking at this as your structure, A, B, seed wave to come, again, we're sitting right at the top of this structure where this is your impulse. Go into an A, B, C expanding flat, and then this is your second impulse up. We're sitting right at the top at the 1.618. So it's another structure on the lower time frame that's really overextended. So as you can see, the theme is pretty much congruent. We're sitting right at the top of a lot of these structures. It doesn't mean we're at the top, but we're at a point where it's really difficult to get long with any conviction or any longer term trades. So you really have to play the game in that manner where we're sitting at the top of the structure. How can we get long but still protect our downside if we do start to see a turn? So that should be your thinking in the general market at the moment. Advanced micro devices, just going out to the monthly, you can see this is your structure and we're sitting right at the extended level, 2.414, so really extended. Weekly, the best we have is impulse, this little correction in the middle, and then a big impulse up. So if we look at that as probably a triangle, you can just see how extended we are. So this is the structure here. And I doubt that, or maybe this correction is long enough. Does look like it's okay. Even then, you see how short that is in comparison to the previous impulse. So just see how extended these markets are. The structure down here, it's really struggling to get some downside. And when we zoom in, you can just see how messed up the structure is. We have a big impulse off the high, impulse, impulse, impulse. So at best, what I'm looking at here is a kind of expanding, running triangle, or a running, expanding triangle for more downside. That's the best I have. And trading a running, expanding triangle is pretty much a nightmare. Really challenging. So you have to really just look for a decent flag to get short once you start to see a little bit of downtime momentum on the lower time frames. Anything else I don't really see. Boeing, still kind of leaning towards this being a little expanding triangle for more downside. We seem to have topped out a little bit at this E wave and maybe getting a little bit of a kind of flag, maybe something decent worth trading to the downside. So that's worth looking at in terms of shorts, good downside momentum, and good downside target. Even on the lowest structures, you're looking at a 173 full target. When we zoom out, looking for any conviction for longs, the best we have is the daily. We have an impulse, a correction, and an impulse. And structure-wise, maybe there's an upside to come to this, trading up to 297. So, but when you look at the structure itself, it's a real mess, especially in these lower regions. So again, maybe a straddle is another solid move here, because what you have is potential downside of, potential downside of kind of 174, potential upside of around 300. So you can trade it in that manner where you're just looking to see you're happy with either up or down. Alibaba, I'm looking to see this develop into a nice little running flat for upside. So this could be a nice long trade that's worth looking at, given that we just came out of a big move down. I'm going to zoom out quickly just to show you the higher time frame. You can see how we have a nice big impulse. We have a nice long drawn out running flat that looks really good in terms of more upside to come. So we can start to look for long trades. When we zoom in, we see we have a pretty big impulse off the lows, and we go into this nice long drawn out correction, which I'm starting to look at as a little bit of a running flat. You have a nice little wave down, little 1, 2, 3 down, push up with a decent amount of choppiness in it. Maybe you get a nice little C wave to the downside, and you can start looking for longs. When you look at the length of that correction, you can see how we're already sitting in the right region. And once it's complete, you can see how we're sitting in that little sweet spot that we like to see in the length of correction. In terms of the structure, the upside looks really good because we can start to look for an upside target around about 318 on the lower structure back to old highs. So that's a really nice long that we could set up for later in the week, and definitely worth keeping on your watch list for conviction for any longs, given how bullish the market is. Bank of America, big impulse down, big impulse up. Makes no sense in terms of structure. We have to just wait and see what to look at, how to look at it down the line. Maybe it's an expanding triangle, maybe it turns into a triangle. We have to wait and see. But when we look at the higher time frames, you can see how we're really sitting again at those really challenging regions to get along with any conviction. That 35 region, the double top high, is still a big sign for me that we're at the very, or at least close to the top side of the structure. When you go into lower time frames, we have a nice little impulse off the lows, corrective structure, triangle, and again, we're sitting right at the top of that lower time frame structure. So it's that same scenario where we're sitting at the top of the structure on both time frames. And no real clarity as to what we're seeing on these lower time frames, just an impulse up and an impulse down. So getting long with any conviction, I struggle with. Again, even on the hourly, we don't even have a crossover from these lows. So it's basically gambling if you're looking to get long something like this. Berkshire Hathaway, again, nice little long trade or nice long price action, but nothing with conviction in terms of looking for a long. Best we have, and this is the hourly chart, is to look at this as a kind of contracting flat. And that puts us with some decent upside to come. So maybe you can find a little flag. This flag was maybe worth taking, maybe get some upside running there. But when we zoom out, you can see exactly where we're sitting. We're sitting in a real dangerous zone here. Impulse up, a little running flat, sitting right at the maximum of that structure, or not the maximum, but the full target of that structure. So maybe this turns into something extended. We get up to 270, which is the full target of the lower time frame structure. So if you can find a long in this, perhaps that's worth looking at. But as you can see on the hourly, how far we've come without a crossover. We've gone from 226 up to 242 without anything resembling a crossover corrective structure. So yeah, really risky trading. Beyond meat, still think this flag to the downside is an option. Higher time frame, I still see downside. Maybe we pop higher up towards the top of the structure at 240, but the lower time frame is not giving us any structure that says that's what I want to do. We have a big move down, and we've basically just been moving sideways. So to me, that's an impulse and a correction. If you really want to zoom in, you'll probably find a kind of convoluted expanding triangle with a complex flat in the middle, impulse ABCD or ABC, and then an impulse up, maybe even ABCDE impulse up, but that's all corrective for more downside. Citigroup, big impulse off the highs, looking for this to become corrective. at the moment, it's just pretty impulsive off the lows. Still waiting to see how that develops. Zoomed out, again, sitting at the structure highs. We have this on the monthly chart, impulse, A, B, C, impulse. So we really wanted to see this go break the highs. That's the max of the structure, but there's no need for that to happen. It could be a wave failure. And when we go into the lower time frames, we have this as an impulse. This is a kind of zigzag ABC, and we're sitting right at the highs of the structure, near those maximum targets with a big pullback. So very difficult to look for conviction unless this develops into a decent running flat over the next few months. So we'd have to be here for months before you can get any conviction. Even on the lowest structure, that's your impulse. Your full correction is kind of March, April, before you can find anything long. CCJ, Camco. Just going to start running through these a bit quicker now because I think you get the point. But impulse, A, B, C, D, E, impulse up. We've crossed the maximum, maybe approaching, we've approached the full target. We're approaching the extended target at 20. But again, hard to have any conviction. Lower time frame, we have impulse off the lows, A, B, C, D, E. And again, we just crossed the 0.618 and then a strong pullback. So maybe a little bit more upside to come, but limited. Again, it's very limited in terms of these structures, how much upside there is available. We've had a big impulse off the highs, and this is looking more corrective for downside, if anything. So maybe a decent short available as entry order below these lows as your option. Chipotle, another one that's just come a really long way without any conviction for any longs. Simplest way we could look at this is one big impulse and a really deep zigzag correction, which doesn't even make sense. But I'm just going to show you how far up on the structure we are. We're sitting at 1.618, if that's your structure. If you want to look at this as your structure, and this is some kind of expanding flat, we're even more extended, looking at that as some type of expanding flat, which doesn't really work either. So however you look at it, I just don't see a way where you can be long Chipotle without any conviction. DraftKings, we went to go break the highs, which is what we were looking for. It's one of my preferred stocks to be long, but again, look, we're sitting at impulse ABC, really clean structure, sitting right near those highs. And when you zoom into the lower time frames, you have this impulse ABCDE sitting really close to the top. 0.786 got touched on before we saw a pullback. So we're right at the top of that structure, seeing some decently bearish price action on the dailies. Zooming in on the hourlies, nothing in terms of a decent entry, in terms of structure. We have to see how it plays out. But again, hard to be long. Disney, I'm happy to look at this as an expanding flat, given the structure within it. So I know I was looking at this differently previously, but I've gone back to looking at this as an expanding flat with upside. And as you can see, it's a nice long correction for that as your impulse. But again, if that's the case, this is your impulse, A, B, C, D, E, or just an expanding flat, however you want to look at it. We're sitting really at the top of that structure. Maybe we get extended, but we're sitting at the top of that structure and should see decent correction. When we zoom in to, say, the dailies, you can see how we have a decent structure there. Impulse off the lows, A, B, C, and then a nice impulse, and we're right at the extended levels of that structure. So again, same theme. EA, weeklies, zoomed out, you can see we're right at the top of the structure of the correction. And if we look at this as an impulse A, B, C, we're sitting right at the extended level. Double top with MACD divergence on the weekly. So challenging long scenarios. Zoomed in, no real structure in here. You can't really look at this as an impulse, and then this is your correction. It's too short in my view. And when we look at it in that manner, there is some upside to come. But again, you're trading in dangerous zones, dangerous levels. So I'm more inclined to wait, just be patient. Patiently wait for the short, because the short is much cleaner than trying to find or gamble on a long. Forward, similar scenario. Structure-wise, lower time frame impulse, ABC, sitting right near the top of the structure, right towards that extended level. So again, it just makes more sense to just be patient, sit on your hands, wait for the short, and just cherry pick your potential longs that you're looking for. Fire eye, still looking for the short, structure still looking good. Impulse off the highs, ABC, maybe get a tiny little pop off this flag to the upside, but I still see this fading to the downside and giving us a decent short. GDX, this is looking like it's starting to play out as we thought it would, where we have this as your A wave to the upside, impulse down, A, B, C, D, E, expanding triangle central structure with another push down, impulse up, that's your ABC running flat, and then from there we see downside. And again, all of that is a break and retest of a neck and shoulder or head and shoulders trend line, which is interesting to see, considering gold looks really like it's starting to fade and starting to get some downside momentum. Goldman Sachs, again, if we go all the way out to the monthlies, structure-wise, we have impulse, long drawn out ABC, impulse. We've crossed the 1-to-1. Maybe we get up to 370, but again, at that extended level, still expecting this big move down to come, which is a really big move on this chart. So big downside on the cards. When we zoom into the lower time frames, structure-wise, as you guys know, this is a really nice clean structure. We traded to the long side, but we're sitting well beyond the full target, moving up towards extended. iShares Trust, weekly, impulse down, impulse up, ABC, impulse up. Structure-wise, sitting at that extended level. Lower time frame structure, impulse off the lows, correction that isn't long enough, but still sitting at the 0.786 of that correction. If we maybe turn this into a bit of a triangle, make that your extended wave, then that is your impulse, which makes the correction long enough. But even then, now we're sitting at the full target of that correction. So same scenario, still looking for the short. And I know I sound like a little bit of a broken record for the last few weeks, but to me, that's what makes the most sense on these charts. IBM, maybe upside on this. So this is one I would look at potential upside for one little reason. So zoomed out, you can see where we're sitting at a very dangerous level. We have an impulse, we have a decent corrective structure, and we want to see downside. I'd just like to see a little bit more upside first. So I'd like to see this structure play out for us to go break these highs at 158. On the daily, it is a bit of a mess given the gap, but potentially you could look at this as a bit of an expanding triangle. So you have an impulse, A, B, C, D, E. Maybe we get some upside from here. Obviously, I could be wrong, and we have all of this is actually just your correction. This is your wave up that fails, and we are now moved to the downside. That's how I've been looking at it previously, as you might know. So I'm just looking for any areas that maybe there's a long trade for us. And in terms of setup, I don't see the long trade setup, given that we've had this big impulse down. If we switch to the line chart, you can see impulse ABC. This is looking more like a downside target. But if you start to see something that resembles a long trade, maybe this is one you can get long for a little bit of upside from kind of 124 up to 137, maybe even up to the top here at 158. But even then, the structure doesn't call for it. Intel, zoomed all the way out. you can see how this just looks like a very clean structure for downside. Little nice 1, 2, 3 down, choppy move up, still looking for a move down, big move to the downside. Going down to the weeklies, you have this impulse. Maybe we can look at all of that as a triangle. So that's your impulse, A, B, C, D, E. Even if we're being very, very favorable to the price action, we're sitting right at the top of the structure. Still looks to me like a little bit of a head and shoulders type structure, a little bit of a topping pattern. Maybe we can look at it as an expanding triangle. If that is an expanding triangle, we'd have to look at this as an impulse. That wouldn't even work. We'd have to look at that as an impulse, in which case this being your impulse, excuse me, this is your impulse, your full target is just back at these highs. So we're sitting again right at the top of the structure. Hard to find any reason to get long. So I think you guys get my point. I'm not going to run through all the charts. It's getting a bit long-winded now, but you can just see all of these structures, how we're sitting really at elevated levels and should expect a pullback to come fairly soon. Another one, Johnson & Johnson, on the weekly touched on the highest pullback. So just be very careful looking to get long with any conviction on these charts. I would rather look for charts that have the best possibility of having longs and maybe get long those while still keeping in mind we're sitting at those extended levels. It just kind of protects your downside being overly long in this market. And in terms of those longs, they're kind of hard to find in my view. I might just be overly bearish. I'd rather sit out until we get something that looks decent. Just trying to find longs is just really challenging for me at the moment. Like Live Nation is another one, big move down, choppy move up. We're sitting right at that level where we want to start seeing a move to the downside. Hard to be long there. 3M, structure-wise, maybe a long, but you can see this big push off the highs is more like a downside trade to me than anything else. Morgan Stanley, sitting right at the top of that structure. MicroStrategy, parabolic move to the upside. Nvidia's maybe one that you could look for a long if this starts to play out, because this to me is a decent structure. We have a move off the highs, that's your A wave, impulse A, B, C, D, E, impulse up. So I'd be willing to look at that as an ABC, but we still need a big move to the downside. If we see the structure-wise, length of correction, if we get a choppy move down, then that to me is worth a long. But at these levels, trying to get long just doesn't make sense. PFE, Pfizer, possibility again, still looking at this as a potentially decent looking running flat, but I want to see a push up and a lower time frame correction to get long. So this is something I put on the cards for a long, but I need to wait for confirmation because there's still the potential that all of this is just a triangle, impulse A, B, C, D, E, impulse. That structure is complete. We're now off to the downside. And as you can see, even on the lowest time frames, this looks more like a running flat for downside than anything else. So worth looking at a short trade actually more than anything else. Ross Stores, zoom out, you can see structure-wise, we're just sitting at a level that's says short trade more than long trade. Lower time frames, still don't see anything that resembles a decent entry opportunity. We have an impulse down and impulse up. Unless this develops into a triangle over the next few weeks, no longs available. Spirit Airlines keeps popping higher, but I just don't see a scenario to get long with conviction. Best we have is an impulse, some type of corrective structure in there, and an impulse that is sitting at the maximum or at the full target. So again, hard to find any conviction to be long. Only way I could look at this with any conviction is if we get a decent pullback down towards kind of 27 bucks, and then a decent push up. Then you can look at this lower time frame structure as a potential long trade, impulse A, B, C, and impulse up to 38. So maybe, but still at the moment, I don't see anything there. If anything, it's actually a nice little short trade here, flag wise. Starbucks, zoom out. Top of a big structure. MACD divergence, looking like we're running out of momentum at the highs. No real conviction for a trade. Lowest time frame we have is this as an impulse, A, B, C, D, E. So maybe we can look at this one as a long trade. If we get this pullback towards kind of 102, and then you can put an entry order above the highs and trade this as an expanding triangle. Just keeping in mind that is a lower time frame structure. The higher time frame structure still says downside. So just keep your stops nice and tight. Twitter, your guess is as good as mine as to what Twitter's doing. In terms of structure, if we zoom all the way out, you can see we have impulse, really nice structure, ABC, impulse up, now sitting right towards the top of the structure, like extended 1.618. When we zoom into the lower time frame structure, we have very clean structures, but just showing you where we're sitting, A, B, C, sitting beyond the extended wave. I don't even know what to make of this wave, but maybe we can look at it as a 1, 2, 3 impulse up. Regardless, we're sitting right at the top, so I don't see how you can find any longs with conviction. Visa, zoom out, structure-wise, I still see downside. Impulse, structure-wise, all we have is impulse, ABC expanding flat, and we're sitting at the minimum level. So maybe a long here, but I don't know how you can get long with price action like this. None of this says to me upside conviction. You'd have to look at that as an expanding flat, impulse, expanding flat, and now impulsing to the upside, which means your upside target is 231. You're sitting right near the 0.618. So even on the lower time frames, really challenging to find a long trade. I'm going to get rid of that. I don't think that counts anymore. We can't look at that as, if you look at the MACD compared, you can't look at those two waves as the same. Maybe a long trade here, if this gives you a little bit of a pullback this week, and you can see how that's a nice little impulse, A, B, C running flat, and then get your impulse to the upside. Very short-term long that maybe gets running. So maybe Visa is a decent long trade to find conviction for long. But if you look at the length of the correction, we need for this to play out just a little bit longer than it has already. But not too bad along. But again, very low time frame stuff. Verizon looks like it's correcting for downside. XOM, ExxonMobil, oil's been really on a tear the last few days. When you look at the structure, impulse A, B, C, we're sitting right at the top of the structure. Again, also sitting right at the top of this structure. Again, there's a little bit more upside potential if we go break the highs we saw back in June. But the structure that after that is saying downside. So impulse up, choppy move down, impulse up. We should see that ABC complete and more downside to come. And then finally, Zoom. I think this is just a really clean short setup more than anything else. Impulse down, very clean ABC correction, alternation, everything that we need is playing out really nicely. I would start to look for the short on Zoom. Don't see any longs. So yeah, long-winded, drawn-out market breakdown, but I just wanted to show you that I remain bearish, and I hope you can see I remain bearish with pretty good conviction given where we're sitting in all the time frames on these structures. So you really want to look for longs that only make sense, and as you can see, we're pretty limited in our choice for longs. So just be really cautious with getting long this market. The sad thing is this market could run without us, given the extended capabilities that this market has, but there's no real conviction in getting long at the same time because we're sitting at the extended level. So if you really wanting to make use of the upside, find the trades that have good long conviction and maybe just trade them using call options. Or if you find markets that are really on a tear, something like Google that just doesn't look like it wants to be put down, just maybe buy some call options, gain the upside on that with limited downside. Just be really careful in the markets at the moment. I'm still watching the dollar with a really close eye, waiting to see what's happening there. No real evidence that we haven't seen a turn in the dollar just yet. And if we have seen a turn, these markets might start to hurt a little bit. So yeah, that's it for today. We'll chat again on Thursday.